Hello everyone, I'm Shivang Mehta. In this video, we are going to analyze Navi Nifty Midcap 150 Index Fund, and we will try to find out that who should actually invest in this new NFO by Navi Mutual Fund according to their risk appetite and different factors. Moving to the next slide. First, we should know about the company Navi Mutual Fund. So Navi is the latest venture by Sachin Bansal, former co-founder of Flipkart India, largest e-commerce player, and Ankit Agrawal, former a banker with Bank of America that plans on making financial services simple, transparent, and accessible to all. So as you can make out, there's a lot of corporate experience behind this company. So this company looks highly reliable, and Navi has taken a technology-driven and customer-centric approach to launch its products, and companies using these two factors to bring down costs as well. Around asset under management is 1.3 thousand crore. Startup, Considering company as a startup, asset under management is quite justified, and companies catering to 5 lakh plus customers till now. Coming to the Navi Nifty Midcap 150 Index Fund NFO. So it is an open-ended fund. So anybody can invest in any time, and they can get back their money at any time without any load or any other cost incurred. Benchmark is Nifty Midcap 150 TRI. So Midcap 150 index of you know of National Stock Exchange has been taken as benchmark, and this company will replicate same 150 mid-cap index of National Stock Exchange. So plan is growth, and as we have known, entry and exit load is nil, and minimum you can start with 500. Risk meter is very high. So this, NFO is only eligible for the type of people whose risk appetite is really high. Fund manager is Pranav Vasa. So Navi Nifty Midcap 150 Index Fund will replicate Nifty Midcap 150 Index. Nifty Midcap 150 Index represents 150 companies. Companies ranked 101 to 250 based on full market capitalization from Nifty 500 Index. So company ranked between 101 and 250 according to the market capitalization. Basically, the market value of the companies are considered in these index, and these companies have very high growth potential, and they are on the paths to path to they are on the paths to to being a large cap company in future. Whose Navi Mutual Fund is offering investor a chance to invest in the emerging companies at a very low cost as part of their latest fund offering. This low cost has been achieved by leveraging, as we have discussed, high quality technological backing. Company's competitive advantage of NFO. So what advantage this company has compared to other companies, and what advantage investors have? So diversification. So investor can diversify their portfolio into mid-cap companies, providing a diversification benefit to a large cap portfolio. Attractive returns. So Nifty Midcap 150 Index has achieved attractive returns over varied time horizons. So in 1 year, 5 year, and 10 year, CAGR of company has remained 46%, 18, and 19%. As you can make out, so over a long period of time, you can easily make around 20% returns, which can be beating, inflation from a large length. Total expense ratio is 0.12 per annum. So compared to the 0.2% total expense ratio of other funds, the expense ratio of this company or this mutual fund house is quite low. Gains in long term. So in this, can we are trying to show that what gains you can make by investing in this NFO over a long term. So if you invest in this fund compared to the any other same index fund, you will save 25,000 over 10 years, 3.2 lakh over 20 years, and over 23 lakh over 30 years, considering SIP of 15,000 per month, and average, total expense ratio of other funds is 0.2, while total expense ratio of Navi Midcap is 0.12, and growth rate considering 15%. So you can almost make 25,000 in 10 years, considering the low expense ratio of the mutual fund house. Let's see the performance of midcap 150 index over a long period. So Nifty Midcap 150 index has achieved CAGR of 46.1% in last 1 year, 18% in last 5 year, and 10% in 90 in 19% in 10 year. As you can make out from the graph, the performance of the companies in the index has been quite stable. So there is low volatility and continuous growth in the performance of the index. Now let's look at the top 10 companies in the index. So Adani Total Gas has the highest weightage considering the growth prospects of gas and the energy, renewable energy or the green energy, we can say, in our country. So 3% almost to Adani, Tata Power, SRF, AU Small Finance Bank, Voltas, Z Entertainment. So top 10 in top 10 as well, the in portfolio of companies are completely diversified, and there is, and the NSE has made a sincere effort to reduce risks of investor to lose money in short term. Com Coming to sectoral representation of index, so highest representation has been given to financial services 17%, consumer goods to 10%, industrial manufacturing 9%, automobile 8%, and IT 8%. These are top 5 sectors in the index. So here also effort has been made to diversify into as much as sectors as possible and gain benefits from growth of those sectors. Pros of investing in this NFO: has a diversified portfolio with investment in sectors from various stocks from various sectors. So you can diversify your investments, will be suitable for aggressive investments looking for mid-cap exposure. So this NFO is suitable for aggressive investors who are looking for mid-cap exposure and not interested in actively managed funds. They are there, they want to manage their risks. This fund is free from fund manager bias. So there is no fund manager bias or opinion involved in managing this new fund. So that risk can be avoided by investing in this NFO. Coming to the cons of investing in this NFO: not suitable for conservative investors as it invests in mid-cap companies. So risk appetite has to be quite high to invest in this NFO, considering the volatility in mid-cap companies and in their due to their performances and fluctuation in their revenues and profits. So as an index fund, this may underperform its index due to certain factors. So it is quite possible that it is not 100% sure for the fund house to replicate same index as compared to index fund. So there might be some up and downs there. This fund will not be able to deliver market beating returns. So market beating returns, you can consider the headline peers, Nifty 50 and Sensex. So it might not give returns as compared to them, but it can definitely give inflation beating returns. So now the most important question arises: should you invest in this new NFO or not? Suitable for aggressive investor, as we have discussed, who is not willing to take risk to invest their money with actively managed funds to avoid their bias. For investors looking for large cap and small cap, so this exposure is not for the people who is looking to diversify aggressively in large cap and small cap. Long-term investments in actively managed portfolios can better returns. So this, you can consider that those, if you invest same amount in long term in actively managed portfolio, they might give you better return than this index fund. So you have to consider your risk appetite, your time period of investing, and your investment strategy, and invest in this NFO. Thank you.